General risk disclosure. Trading financial instruments, including forex, futures, equities, commodities, and cryptocurrencies, involves significant risk of loss. Trading is not suitable for all investors, as it may result in the loss of your entire investment. Leverage, volatility, and liquidity risks are inherent in these markets. Before engaging in trading, carefully consider your financial situation, experience level, and risk tolerance. You should only invest money you can afford to lose. Forex and futures disclaimer. Trading in the forex and futures markets is highly speculative and carries a substantial risk of loss. The leverage nature of these instruments amplifies gains and losses, potentially leading to substantial financial exposure. This content complies with CFTC Rule 4.41. CFTC Rule 4.41 disclaimer. Hypothetical or simulated performance results have certain inherent limitations. Unlike an actual performance record, simulated results do not represent actual trading. Also, since the trades have not been executed, the results may have under or overcompensated for the impact, if any, of certain market factors, such as lack of liquidity. Simulated trading programs are also subject to the fact that they are designed with the benefit of hindsight. No representation is being made that any account will or is likely to achieve profits or losses similar to those shown. Equities and commodities disclaimer. Equity and commodity trading involves risks associated with market volatility, company-specific factors, and geopolitical events. While stocks and commodities may have a lower leverage factor compared to forex or futures, they can still result in substantial financial losses. Cryptocurrency disclaimer. Cryptocurrencies are speculative and highly volatile instruments. Trading cryptocurrencies involves additional risks, including regulatory uncertainties, security vulnerabilities, and lack of liquidity. Cryptocurrencies are not regulated by most governments or central banks, and their value may be affected by external factors such as news events and market sentiment. Regulatory references. In the United States, this content adheres to the regulatory standards of the Commodity Futures Trading Commission, National Futures Association, and Securities and Exchange Commission. In the European Union, trading practices comply with the European Securities and Markets Authority standards. Global compliance, content aligns with internationally accepted guidelines, but laws vary by jurisdiction. Consult with a licensed professional in your area. Past performance disclaimer. Past performance is not indicative of future results. Any historical results or performance shown in this content are for informational purposes only and do not guarantee future performance. Educational content disclaimer. The information provided in this video is for educational and informational purposes only. It is not intended as investment advice, nor should it be construed as a recommendation to buy, sell, or hold any financial instrument. Always consult with a licensed financial advisor or regulatory authority in your jurisdiction before engaging in trading activities.
All right, let's knock out this work. We need the news. Oh, tomorrow's NFP. And it's easy. What is in the way? Okay, it's already out. Forex Factory. I got everything except for the screen grabber. Here we go. NFP. $8.30 NFP. CME Fed Watch. Okay, this is set. I really don't even have to look at this no more, but I don't want to create bad habits of not checking it. But we're not changing Fed fund rate for June 18th. NFP probably could do it if it is like crazy, but I think 3% pretty much sets the no rate cut in stone. We would have to have a tariff hike or something to bring this number down. That's just from watching how we did it with the tariffs the first time. When he first was like, all right, we're going to tariff everything. This thing went to the 120% chance for a rate cut. 67, we're pricing in July rate cuts right now. I think NFP could speed that along. I mean, it's possible. If CPI comes in cool, then they're not going to want to do it. 66% chance of rate cuts in July 30th. Earnings for tomorrow. Oh, today was no. Today wasn't AVGO. Tomorrow. No, today was AVGO. Go to earnings. Today's Thursday. Broadcom was today. Let's go back to the other page. Let's see if Broadcom. Friday never, ever, ever has good earnings. Nothing to move the NASDAQ. Let me see if Broadcom beat earnings. AVGO earnings. Not earnings date. We already know it was today. Shows robust AI demand. Boom, boom, boom. Down on the transcripts. It's down. Strong buy dot. Yeah, it is highly valued. One thing I like about clicking these links is pop-ups and they try to make you buy it just to read it. Second quarter and with guidance. Okay. So they beat everything, but they still sell. Okay. I mean, that happens a lot. People got to take their profits. Let's go to my lovely American dollar. This is going to hold. This whole week has just been waiting for NFP Monday, Tuesday. This Monday's range. We even gapped here. We kind of need to take care of this. But NFP comes in strong, we go up, and then CPI and things like that can push us back down. NFP comes in bad, we could just melt through this. And I don't want to have no swing unless I'm way, my stops away in profit. I don't like to go in on NFP week, like be extra nimble. And I think I got stopped every day this week, but I had really small risk. Like you stick your toe in the water, the water's still too hot. NFP tomorrow. I would like to see a spike up at least to put a wick or body through the volume imbalance. Today, NASDAQ. Okay, target hit. Look how the delivery was. Target hit, create a fair value gap, don't use it, no fair value gap. Target hit and it dangerously went everywhere I was looking for. Because I had a line here, well it's actually still here. That was the target. And I wanted it to happen up here. So it happened like I wanted it to happen, but it's just the delivery was tacky. What time was this hit? 10 o'clock. This came right. So we hit this failure swing, grabbed this, and then came back up to that old opening price I was looking at, which is like, I think it's also a daily fair value gap. A lot of people was looking at. Okay. Target hit. We have market structure break. to the downside. But it's actually a market structure shift. Market structure break is a continuation to the downside. But the delivery is tacky. I would need RTO or return to the order block to be interested in the sale, or basically a retracement to a bearish PD array to be interested in the sale. Weekly, we came to the open price. We didn't come here. Okay. Price came to the first candle of it's really an old weekly open price to the old weekly open price. It sold off, retaking buy side liquidity that was already taken. Punishing early sellers. It made me think about the Punisher from the Diddy case. All right, we closed below 1 day the candle, but not 2. So, and this down candle. I do like how he stop hunted this candle. So both sides of this candle are swept. It makes me want to focus on this candle. Range box it. Did this candle take any liquidity? It didn't. This was the last candle we closed above here. So we failed to expand yesterday and today. We closed below this candle. It's just a really, really, really ugly stop hunt. This could be a retracement for higher. Look how we're sitting on 2025 open price. We still don't have a bearish array. We do, however, have an old fair value gap we can use. This has to hold for me to be like, okay, I'll find something below that. This weekly fair value gap is, I don't need this no more. I just don't like too many lines. Okay, body close above here. Expansion, failed to expand, push down, close below this candle. This candle still has no close below. That's the only thing I can add here. This fair value gap should hold. If it goes past this fair value gap, I don't think none of this is going to hold. Just because this candle didn't even take liquidity. So the liquidity was taken way up here. It's this wick. So these are my levels. This gap and then here. The only thing that's interesting here is the inversion, fair value gap, and the candle high, old daily high that we failed to expand above. Let's go here. I could refine and scoot this up. This is the real range for me. We're at EQ of it. Dreadful position. We can chop. Most likely we will chop EQ of this range, which is here. Even here, this is not clear. Wick, wick, wick. It's a triple wick. I just thought of something. Okay. See, I didn't take long. I ain't have to pause the recording. All right, boom. What's this? New day opening gap. It still needs downside. This is interesting. This will be a target just because we only got up candles here. I want to see down candles here. Okay. Yeah, new day opening gap. Low. New day or new week opening gap. It's missing sell side. Delivery. I think we go there next. Which will be this price. Yeah. 21,369. Yeah, the 4-hour chart didn't give me nothing either. I mean, we got a cool pretty cool gap here. This will be a refinement of that gap. So on the 1 hour chart, it's really not that far. This is regular trading hour gap. We probably open up in this area. We haven't been leaving too many crazy, but this was market open around here, open here, market open around here. That's crazy how regular trading hours has that much hold on the market. Friday's target is 21,369.00. The high of the midweek opening cap. I think I should start looking at 50% here. The premium discount logic. So this is EQ here. EQ of dealing range. That'll be my trigger. Alert. And EQ of dealing range to signify we are in premium, and see if we get run on liquidity to look for sales. It most likely could be session liquidity, maybe London high. All right, that's that on that. Y'all have a good day. Peace.